I think it's safe to say that this rally coming out of the bottom um, in December has been a lot more powerful than most of the bears were anticipating. It blew right through this first level of resistance at 2550 without even pausing. And now we're at the second level of resistance at this 2600 level. We are getting a pause here. Um, I do think we're going to go through this though for a couple reasons. First off, it seems pretty clear that this is an intermediate bottom, and the initial thrust out of a intermediate cycle low um, usually doesn't take any kind of significant pause until day 15 to day 20, and I think we're only on day 12 today. So I my expectation is that we're going to churn around this 2600 level a little bit and then bust through. And keep in mind, we had one of the most powerful um, breadth thrusts out of this bottom in history. Uh, these were 95% up volume days here, and then back last Friday, I think it was. That's not um, typical of a bear market rally. That's typical of the beginning of a new bull market. And granted, there are some analysts now that have recognized that um, in a non-recessionary period, these severe pullbacks are corrections and not the beginning of a bear market. But most people, or most analysts, I think, are expecting a retest, and I'm kind of on the fence as to whether I think we will retest this low or not. And I think it will just simply depend on fundamentals. And by that, I think that the two fundamentals that were spooking the market was one, the Fed's hardline stance on raising interest rates, and they've clearly backed off of that. That was probably one of the initial causes for this major rally. But the other is the trade war, specifically with China. And I think if that concern gets resolved soon, then I think we don't retest these bottoms. Now, granted, most of the time these really severe corrections do have a retest. You can see we had one here back in February and in March. We retested this low. Widen the chart out here a little bit. The last 4-year cycle low here in 2015, 2016, you can see we did retest this initial low when we actually undercut it. This was a 4-year cycle low. I think that's probably what we're working on right here as well. Also another 4-year cycle low here in 2011. Again, we did get a retest right here. 2009, also a multi-year cycle low. We did not get a retest during this one. And I think the reason was just a change in the fundamentals. QE1 began, and that was just a game changer. There was no need to retest this bottom. The market just took off and never looked back. I think the same thing could happen here, but we need to resolve the trade war and get that concern erased from the market. If we do that, then I think this turns into just a V-shaped rally, and we don't look back, the same as happened here in 2009. If not, if it continues to drag on and no deal with China is forthcoming soon, then I think the odds are very high that we're going to roll over here and come back down and test this low, or maybe undercut it slightly like we did in 2016 and also in 2011. Now keep in mind, in order to confirm this intermediate cycle low, at some point the price has to break this intermediate downtrend line. So this could unfold in one of two ways. We could top here pretty soon, maybe the end of the month, and then this daily cycle come back down and test it, and uh, it should hold above it. If the pattern plays out like this, then it should hold above this low, the same as it did back in March. Let me widen that chart back out so I can show you that. All right, so if we follow this template here, then we'll get one daily cycle that rolls over and then comes back down to test, but does not break below this low. I would put the odds slim for this scenario. I think the more likely scenario would be that the intermediate cycle unfolds, we break this trend line, we come up and test this triple top resistance here at 28, and then we move back down and retest this maybe, I'm going to say probably sometime in April, maybe as late as early May. This was an exceptionally long intermediate cycle here. And usually you'll get a short cycle that will follow a long cycle. So my thinking is that the barring a trade deal, that we would price would come up, break above this trend line, probably get up here to the 28 level, and then come back down and retest or undercut this late in the spring. Now, if we do get a trade deal between now and then that's probably off the table, and we're probably on our way. We'll go above this. We'll make new highs, and the secular bull market will resume. And as most of you know, I'm still in the camp that this is a long-term secular bull market. Still has probably 10 to 15 years to go yet. So I'm going to say maybe 25% odds that we follow this template here, come down during the first daily cycle, retest but hold. That would mean we would maybe we test this trend line, then come back down and retest the low in February, and then off to the races. But I think the odds are much better, maybe 75% that we continue up, break this intermediate trend line, maybe test the 2800 level, and then come back down for a retest or undercut in April or May. And if sometime during that time we get a resolution to the trade war, then I think you can just scrap the retest scenario completely, and the long-term bull market should resume.